Something extraordinary is happening right now in the global financial system, and it's unfolding at a speed that has stunned even the most seasoned Wall Street veterans. Just days ago, markets were gripped by fear. Oil prices were surging. A potential escalation in the Middle East threatened to choke off one of the most critical arteries of global trade. Investors were bracing for impact, preparing for volatility, and in some cases, outright panic. And then, almost overnight, everything changed. Global stock markets didn't just recover, they exploded upward. From New York to London, from Seoul to Shanghai, trillions of dollars in market value surged in what analysts are now calling one of the most dramatic sentiment reversals of 2026. The reason? Two powerful forces colliding at the same moment. A sudden wave of optimism that a potential U.S.-Iran breakthrough could prevent a deeper global crisis. And a second, even more powerful driver, an unstoppable surge of money, momentum, and belief in artificial intelligence. This is not just another market rally. This is a story about geopolitics, technology, money, and psychology, all converging into a single moment that could redefine the global economy. But here's the question no one can answer yet. Is this the beginning of a new economic boom, or the calm before an even bigger storm? To understand why global markets are suddenly surging, you have to go back, just weeks, to a moment when everything looked dangerously unstable. At the center of it all, the Strait of Hormuz, one of the most critical choke points in the world's energy supply. Roughly 1/5 of global oil flows through this narrow stretch of water. When Iran moved to block it earlier this year, the consequences were immediate and severe. Oil prices spiked. Shipping routes were disrupted. Inflation fears surged across the globe. This wasn't just a regional issue. It was a global economic threat. Markets reacted accordingly. Investors pulled back. Volatility surged. Entire sectors, from airlines to manufacturing, began pricing in higher costs and shrinking margins. But behind the scenes, diplomatic efforts were quietly accelerating. According to multiple reports, negotiations involving the United States, Iran, and key global players had been intensifying. The stakes were enormous. Avoid a prolonged conflict, stabilize energy markets, and prevent a global economic slowdown. Then came the turning point. Statements from U.S. leadership suggested significant progress toward a potential agreement. Military operations tied to securing oil routes were paused. And just like that, the narrative shifted. Markets, which had been pricing in fear, suddenly began pricing in hope. But that's only half the story. Because at the same time, something else was happening, something that had been building for months. Artificial intelligence. From Silicon Valley to Seoul, companies have been racing to dominate the next technological frontier. Massive investments, breakthrough innovations, and explosive demand for AI chips and infrastructure have created what many analysts now call a supercycle. And when these two forces, geopolitical relief and technological optimism, collided, the result was nothing short of historic. Let's break down exactly what happened and why it matters. Within hours of renewed optimism surrounding Iran negotiations, global markets reacted with stunning speed. European markets surged, with major indices climbing sharply. U.S. stock futures moved higher. Asian markets didn't just rise, they soared, with South Korea's benchmark index jumping more than 6%, fueled in part by massive gains in tech stocks. At the same time, oil prices, one of the biggest drivers of inflation, began to fall. Brent crude dropped more than 3%, easing fears of runaway energy costs and giving investors renewed confidence that central banks may not need to keep interest rates higher for longer. And then came the tech sector. Artificial intelligence stocks led the charge. Semiconductor giants surged after reporting stronger than expected earnings and bullish forecasts. The demand for AI chips, used in everything from data centers to advanced computing systems, continues to explode. In fact, the semiconductor index has seen massive gains this year alone, reflecting just how central AI has become to the global economy. The result? So where do we go from here? There are several possible scenarios, and each one carries significant implications. If a formal agreement with Iran is reached and tensions continue to ease, we could see sustained stability in energy markets. That would support global growth, reduce inflation pressures, and potentially extend the current rally. At the same time, if the AI boom continues at its current pace, we could be entering a period of unprecedented technological investment and productivity gains. But there are risks. If negotiations break down, oil prices could spike again, quickly reversing the current optimism. If AI expectations fail to meet reality, we could see sharp corrections in tech stocks. And if central banks remain cautious, interest rates could stay elevated longer than markets expect. In other words, the upside is massive, but so is the uncertainty. Behind all the charts, the data, and the headlines, there's a human story unfolding. For everyday Americans, these developments matter more than they might realize. Lower oil prices could mean cheaper gas. Lower inflation could ease the cost of living. Stronger markets could boost retirement accounts and investment portfolios. At the same time, the rise of AI is reshaping the future of work. Jobs are changing. Industries are evolving. Opportunities are being created, but so are uncertainties. And then there's the geopolitical dimension. The possibility of avoiding a deeper conflict in the Middle East is not just a market story, it's a human one. It's about stability, security, and the hope that diplomacy can prevail over escalation. This is one of those moments where everything feels like it's shifting at once, and the decisions being made right now could shape the global economy for years to come. So the question is, do you believe this rally is just getting started? Or do you think markets are getting ahead of themselves? Let me know what you think in the comments below. If you found this breakdown valuable, make sure to like the video. It helps more people understand what's really happening behind the headlines. And if you want deeper, fact-based analysis like this, without the noise, subscribe to the channel. Because the story is far from over. And we'll be here every step of the way. Major global indices reached record highs. The S&P 500, the Nasdaq, broad global benchmarks, all climbing simultaneously. Even more telling, this rally wasn't limited to one region or one sector. It was global. It was synchronized. And it was driven by two narratives that rarely align this perfectly: peace and progress. Now let's step back and ask the critical question. Why are markets reacting so strongly? From a legal and geopolitical perspective, the potential easing of tensions with Iran reduces one of the most immediate systemic risks facing the global economy. The Strait of Hormuz is not just a shipping lane, it's a lifeline. Any disruption there has ripple effects across energy markets, inflation, and global trade. If a lasting agreement is reached, it could stabilize oil flows, reduce volatility, and create a more predictable environment for businesses worldwide. From a financial standpoint, falling oil prices are a game changer. Lower energy costs mean lower inflation pressure. That, in turn, could influence central banks, particularly the Federal Reserve, when it comes to interest rate decisions. And that's where things get even more interesting. Because the AI boom is happening at the same time. Investors are pouring money into companies that are leading the AI revolution. These aren't just speculative bets. They're based on real earnings growth, real demand, and real transformation across industries. We're talking about a shift that could rival the internet boom of the late 1990s. But with one key difference. This time, the technology is already being monetized at scale. That combination, geopolitical relief and technological acceleration, is what's driving this rally. But it also raises serious questions. Are markets getting ahead of reality? Are investors underestimating the risks? Or is this truly the beginning of a new economic era? As you might expect, the reaction across social media has been immediate and deeply divided. On one side, you have bullish investors celebrating what they see as a perfect storm of positive catalysts. Posts across financial platforms are filled with phrases like new bull market, AI supercycle, and global reset. Retail investors are jumping back in. Tech stocks are trending. Market optimism is spreading fast. But on the other side, there's skepticism. A lot of it. Some analysts and commentators are warning that markets may be moving too quickly based on uncertain geopolitical developments. After all, negotiations are still ongoing. No final agreement has been confirmed. And history has shown that situations like this can change rapidly. Others are pointing to valuations, especially in the AI sector, as a potential concern. Are prices reflecting reality, or expectations that may be too optimistic? This divide between optimism and caution is exactly what makes this moment so fascinating, because it reveals something deeper. Markets are not just reacting to facts. They're reacting to belief. What you're seeing right now on the surface, a powerful global rally, only tells part of the story. Because underneath that surge, beneath the headlines about peace hopes and AI euphoria, there is a far more complex and fragile system at work. One driven not just by fundamentals, but by liquidity, positioning, and psychological momentum. To understand why this rally accelerated so quickly, you have to look at how modern markets actually function. Over the past decade, global financial systems have become increasingly dependent on algorithmic trading, passive investing, and massive institutional flows. When sentiment shifts, even slightly, it doesn't move slowly. It cascades. And that's exactly what appears to have happened here. There's another player in this story, one that hasn't made a dramatic move yet, but whose decisions could determine where markets go next. The Federal Reserve. For months, the Fed has been navigating one of the most delicate balancing acts in modern economic history, trying to control inflation without triggering a recession. Interest rates remain elevated. Borrowing costs are high. And yet, the economy has shown surprising resilience. Now, with oil prices easing and inflation pressures potentially softening due to geopolitical developments, markets are beginning to speculate. Could the Fed pivot? Could interest rate cuts come sooner than expected? If that happens, it would act as a powerful tailwind for equities, especially high-growth sectors like technology and AI. Lower rates mean cheaper capital. Cheaper capital fuels investment. And investment drives growth. But here's the catch. The Fed is data-driven, and it remains cautious. Officials have repeatedly signaled that they need sustained evidence of declining inflation before making any major policy shifts. So while markets are celebrating, the Fed is watching carefully. And if expectations get too far ahead of reality, we could see tension between market optimism and monetary policy restraint. This rally isn't just about investors or markets. It's about global power. Because when you look at who benefits most from easing tensions and AI expansion, a clear pattern begins to emerge. The United States stands at the center of both narratives. On one hand, diplomatic progress involving Iran reduces the risk of global instability, something that has long been a priority for U.S. foreign policy. On the other hand, American companies are leading the AI revolution. From Silicon Valley to major tech hubs across the country, U.S. firms are setting the pace in innovation, infrastructure, and deployment. That combination, geopolitical influence and technological leadership, creates a powerful advantage. But it also introduces competition. China, for example, has been aggressively investing in its own AI capabilities, aiming to reduce reliance on Western technology and establish leadership in critical sectors. Europe is navigating its own path, focusing on regulation, ethical frameworks, and strategic autonomy. And emerging markets are watching closely, trying to position themselves within this evolving landscape. So what we're witnessing is not just a market rally. It's a shift in the global balance of economic power. Every rally has a narrative. Every narrative has a weakness. And in this case, there are several. First, and perhaps most obvious, the geopolitical situation remains unresolved. Yes, there are signs of progress involving Iran. Yes, tensions appear to be easing. But nothing is finalized. No formal agreement has been confirmed. And in geopolitics, situations can change quickly. A single event, an unexpected escalation, A breakdown in negotiations, a miscalculation, could reverse sentiment almost instantly. Second, the AI narrative, while powerful, is still evolving. If earnings fail to meet expectations, if growth slows, if regulatory challenges emerge, we could see sharp corrections in the very stocks driving this rally. Third, macroeconomic conditions remain uncertain. Inflation is still a concern. Interest rates are still elevated, and global growth is uneven. In other words, this rally is strong, but it is not invincible. Behind closed doors, the conversation among top investors is far more nuanced than the headlines suggest. Yes, there is excitement. Yes, there is optimism. But there is also caution. Many institutional investors are participating in the rally, but they're doing so strategically. They're hedging. They're diversifying. They're preparing for multiple scenarios. Because they've seen this before. They understand that markets can move on momentum for longer than expected, but they also know that when sentiment shifts, it can shift fast. Some are increasing exposure to AI-related sectors, but balancing it with defensive positions. Others are watching bond markets closely for signals about interest rates and inflation, and many are keeping a close eye on geopolitical developments, knowing that one headline can change everything. So while retail investors may see a clear upward trend, professionals see a complex, evolving landscape filled with both opportunity and risk. At its core, this story is about more than economics. It's about human behavior, fear, hope, expectation. Just weeks ago, fear dominated. Now, hope has taken over, and markets are reflecting that shift in real time. But psychology can be unpredictable. When optimism becomes widespread, it can push prices higher than fundamentals justify. And when doubt returns, even slightly, it can trigger outsized reactions. That's why moments like this are so important. They reveal not just where markets are, but how people feel about the future. Because what happens next may not just determine where markets go, but where the global economy heads for the next decade. In the next part, we're going even deeper. We're breaking down what this rally means for American jobs, how AI could reshape entire industries, and the hidden risks that could impact millions of everyday investors. Stay with us.